Hello active traders and welcome to our breakout chart of the week. I'm Ken Calhoun. I run TradeMastery.com with a video for our MoneyShow viewers. As always, all information is for educational use only. We're not making advice or recommendations about what to buy, sell, or hold. You may have seen me as a featured speaker at the Traders Expos. Highly recommend those to attend, and also in other places around the internet. Let's go ahead and start off. I've actually got 3 charts for you this week. We've got 2 day trading charts, 2 for intraday trades, and 1 for swing trading. We're going to start off with this chart, DVN, the ticker, DVN. And what makes this a great breakout chart for today's markets, as I'm recording this live here on June 29th, is the fact that we had a 2-day breakout above the previous day's high that had an open range run that ran all the way from 31 whole number up to just over 32 whole number. That brings up a important trading strategy. As you may have seen me publish and speak at the MoneyShow events, using whole number support and resistance for intraday trades makes a lot of sense. One of my favorite strategies as a professional trader is to go in long at 20 or 30 cents above a whole number and then sell at 80 or 90 cents or so beneath the next whole number for a nice 50 to 70 cent move. So this fits that criteria perfectly. Whole number breakout resistance at 31. It'll often fatigue or stall out near a whole number up to the upside. So as a professional trader, you want to tighten in a trailing stop as it starts to reach that area. Nice breakout with a minor gap. Again, also note that minor gaps that continue are my single favorite pattern. This one is an inside minor gap. My very favorite patterns are minor gaps above the prior day's high, but this is a good inside range minor gap that continue to run up sharply in our current market. The next featured chart of the week is CLR, which is again another minor gap continuation, this time with a small bullish cup pattern. And you can see the same exact strategy. If you go in long somewhere 20-30 cents north of the whole number, so that would get you in at 31.20, 31.30, and then sell out right under the next whole number. That would have got you out right near 31.80 or so. So that length of run, that length of open range breakout price action is what you seek to capitalize on in intraday trades. Note too that many times the very best day trading breakouts like this are also just fine for swing trading. In fact, my favorite swing trading setups are also ones that would have also been good for day trading. So either way, you're looking at trading great open range breakouts in charts in this price region, 20, 30, 40 bucks a share, that have reasonably strong price action that are likely to continue. Okay, next up, let's take a look at our swing trading chart of the week, and that is ACHC. Okay, ACHC. And what I like about this chart, I guess the easiest thing to explain it with is a cup pattern breakout. You've got a strong cup pattern here. It started to run up for 4 days in a row. It went into a sideways congestion, finally lifted to new highs. And a quick kind of a rider downer or a tip is that it's always best to trade cup breakouts like this one when they're accompanied by large tall green candles at the right side of the cup at the point that it's breaking out on high volume. Like you could see here, high volume bars, nice large healthy green candles led to a nice explosive breakout to the upside. It came back down, previous resistance became new support here, and it continued on up, and now it's up in the upper right area where I like to trade. Notice too that in today's markets it stalled at the whole number resistance, like I mentioned many times. Whole numbers, right? 47 whole number resistance and support. 3-point trading range all the way up to the 50 whole number. So a new entry may be indicated if it's able to climb up above the 50 at some point, either later this week or next. What I like about this chart also is the fact that it's got a reasonably strong uptrend continuation. One of the things that separates out good breakout trades from those that don't work out or have false breakouts is you really need to avoid a false breakout area right above resistance. So for example, I wouldn't buy this personally at 50.2 because it may be a false breakout. I will usually add 50 cents as my default go-to kind of false breakout filter above a whole number high. So my earliest entry in ACHC. Not a trade recommendation, but for educational use. I'd wait till it breaks north of 50.50 before putting on a long trade, with kind of a skepticism or a caution that it may do a false breakout right in the first part of the move, right above the whole number resistance. If you're like me and so many other thousands of traders I've worked with, we often have gotten into the first sign of a breakout because you don't want to miss a big run, and then it stalls and drops, we get stopped out, and then it runs up without you, and that can be frustrating. So instead, wait for it to break with at least a 50-cent clearance margin of safety above the whole number resistance, and look for that as a trade setup. So until next time, this is Ken Calhoun with our breakout chart of the week for MoneyShow. Trade well, trade smart, trade the strongest charts, and I'll look forward to seeing you in our next week's episode. Until then, take care and best wishes for successful active trading.